Welcome to Funded Futures Family Day Trading 101. This is a beginner course for all people who want to learn a little bit more about day trading. We are a futures prop firm and we are so excited to start this content to help everyone learn a little bit more about what day trading is, specifically futures trading. We are going to go through the absolute basics, so as long as you are here, just know that we are going to go through absolutely everything to get you started on your feet and eventually start trading at a futures prop. Welcome to Funded Futures Family Day Trading 101. We are going to cover the absolute basics of what it is to day trade, specifically in the futures market. If you guys are new here or know nothing about day trading, this is the place for you, as we will be covering the total basics of futures day trading. Let's start with chapter 1. What is futures day trading? When you're looking at the market, which you guys see over in our screen right now, you guys can see that there is red and green candles. Let's talk about how a candle is formed now. Candle basics. Every candle tells one story. Buyers versus sellers over a set chunk of time. There are 4 prices on the candle, as you guys can see. We have an open, a close, a high, and a low. Let's talk about the green candle. The green candle is considered a bull candle. It turns green when it closes up, and it basically means that buyers won. And when we have a bearish candle, that is a red candle. Red closes down, that also means that sellers won. It has the same, it has an open, it has a close, it has a high, and it has a low. We also have a doji candle. If you can tell, that kind of looks like a little body in the middle with really high wicks, right? High and low wicks. It means no one really won. Open and close are nearly the same, and market was undecided on where the price wanted to be. And of course, we have the wicks. The thin lines show the high and low price reached but could not hold. Only what could hold is that body formation of the candle. And the body is the thick part that shows the distance between the open and close. So again, green closes up, red closes down. Doji means nobody won. A futures contract essentially is going to bid on whether the price of the market will be either going down or up. We have 2 options that we have in order to place a contract, that is sell or buy. If you are buying, you are bidding that is going to go up. If you are selling, you are bidding that the contract is going to go down. Of course, you're going to be bidding on whether the contract will be going up or going down in the near future. There is 2 versions of buying power that you will be trading. You will be trading either micros or minis. 1 micro is equal to 1/10 of a mini. 1 mini is worth 10 micros. So of course, if you guys are wanting to know more about buying power, I would recommend you guys start with using micros, as the risk that you are going to be trading is much less than when you're trading minis. Like I like to say, micros are the training wheels for minis. Each one has its own price, and so does every contract that you trade in the futures market. Next, let's talk about gold versus micro gold. The contract size of gold is 100 ounces of gold, which is equal to $100, right? $1 move is equal to $100. A 10-cent move is equal to $10. Example, if you move $1, you make $100. If you move $10, that's $1,000. $5, that's $500. $25, $2,500. So gold is considered, for the more experienced trader, the bigger money, but also the bigger risk. So make sure you guys are trading with the entire risk that you guys can handle. Now we're gonna go over to micro gold. What's the difference? It is the same market, it's the same chart, same price movement, but the risk is different. 1 gold is considered 10 micro golds. Again, now you're not trading 100 ounces of gold, you're trading 10 ounces of gold. $1 move is equal to $10, right? So a 10-cent move is $1. If you move $1 in micro gold, you get $10. If you move $10, you get $100, $5, $50, $25, $250. So this is more for the beginner traders. It's the same market, just smaller risk. So I recommend this if you are a beginner. Just make sure you guys are aware of what you are trading before you guys trade it. We do have a formula, which is GC profit is equal dollar move times 100 ounces times contracts. And same thing with micro. A micro profit is equal to dollar move times 10 ounces times contracts. Now we have the difference between ES versus MES. ES is a contract of E-mini S&P 500 futures. There's a $50 per point value, so $12.50 per tick. The tick size is 0.25 points. So examples, if you have a 10-point move, you're gonna get $500. 25-point move, $1,250. 50-point move, $2,500, and 100-point move, $5,000. This is best for experienced traders. Again, the bigger the risk, the bigger the reward. And then we have MES, which is Micro E-minis S&P 500 futures. It is a $5 per point value. Tick size is 0.25 points again. And there's examples. 10-point movement is $50. 25-point movement is $125. 50-point movement is $250, and of course, a 100-point movement is $500. This is better for the beginner traders, smaller risk, smaller reward, but there's also smaller positioning size, so you can keep that account longer and learn how to trade using micros, in my recommendation. Again, it is the same market, same chart, same price movement, just the risk is a little bit different. If you want the formula, ES profit is equal to points times $50 times contracts, while MES is profit equal points times $5 times contracts. Then we have NQ, one of our favorites and I think the most used contract in all of the future space. NQ is an E-mini of Nasdaq-100 futures. It has a value of $20 per point, $5 per tick. The tick size again is 0.25 points. Examples: 10-point movement is $200, 25-point movement is $500, 50-point movement is $1,000, 100-point movement is $2,000. So again, this is for the more experienced traders once you have understood micros and minis, and you can now tackle on higher risk, higher reward. You are more than welcome to do that. The formula for this is NQ profit is equal to points times $20 times contracts. Then we have Micro NQ, MNQ. It is a Micro E-mini Nasdaq-100 futures. Again, same market, same chart, same price movement. The contract size is the only difference. 1 NQ is equal to 10 MNQ. This is a value of $2 per point, 50 cents per tick. Tick size is again 20.25 points. Examples of this: 10-point movement equal $20, 25-point movement is $50, 50-point movement $100, and 100-point movement is $200. This is the most recommended for beginner traders. There's a smaller risk, smaller reward, but again, smaller positioning size, so you make sure that you are learning how to trade correctly. Let's go ahead and explain what the end of day drawdown is. So let's talk about our setup. If we have a setup of an account size of $50,000, a 50K account, your profit target is $3,000 and end of day drawdown is $2,000. The rule is that your balance can never close below $48,000. The floor sets up at the close. So again, you start at $50,000. Your floor of max drawdown is $48,000. It stays flat all day until the end of day. Let's say at day one you make $1,000 in profit. Your account is at 51K now, right? Your new floor after that day is at $49,000. And you must stay above $49,000 to keep your account. If you ever go below $49,000 after that first day of making profit, you will breach the account. So that is how the end of day drawdown works. Unlike a trailing drawdown, the floor only updates after the day ends. It does not move while you trade. Think of it like this: climbing stairs, not an escalator. The floor moves up only after you finish each step, not while you're taking it. So you'll have more room to trade during the day, and it protects your profits before the close of the day. That is the end of day drawdown. Lastly, let's talk about intraday trailing drawdown. The intraday trailing drawdown is a little bit tougher. How it moves: the more profit you make, the higher your drawdown moves. It trails up, never down. The rule: your account can never fall more than $2,250 below your highest balance. The account size is $50,000, the profit target is $4,000, and the trailing drawdown is $2,250. I believe this is on a velocity account. So let's say you start at a 50K account, right? Your floor is $47,750. If you make $1,000, your account is now at $51,000. But the trailing drawdown is always trailing at $2,250. So now you cannot fall below $48,750. Think of it like this: a safety rope as you climb a mountain. The rope follows you up, but fall too far below it and the climb is over. The goal isn't just making money, it's protecting your account while you make the money. All right, let's talk about the market hours. The market isn't open 24/7, unfortunately. It is open 6 days out of the week. Market opens at 6 p.m. Eastern on Sunday and closes the next day at 5 p.m. Eastern. So Sunday opens 6 p.m. Eastern, closes at 5 p.m. Eastern on Monday. Repeats that same structure with the market closing for only 1 hour from 5 to 6 p.m. Eastern, Monday through Friday. After Friday close at 5 p.m. Eastern, the market will stay closed until Sunday open. Just so you guys understand how long the market will be open for, and you guys can go ahead and place your trades during those times that the market is open. Make sure you guys don't open any trades close to when the market closes so you guys don't get stopped out by the market. So just to summarize, we covered the total basics: what is bearish, what is bullish, what's a candle, what's a wick, buying power such as minis and micros, some of the prices. As you guys can see, this is just so favorable to the trader. There are many different strategies out there, so make sure you guys choose the right one that fits you.